Hello everyone, welcome to this video class. This is Madhu Chetan. Here, let's solve a problem on preparation of schedule of changes in working capital. Yes, in this problem, a balance sheet is given. So liabilities 2002 and 2003 2 years, assets 2002 and 2003 for 2 years, creditors 55,000 and 83,000 for 2003, bills payable 20,000 for 2002, 16,000 for 2003, share capital 1 lakh for 2002, 1 lakh 50,000 for 2003, general reserve 7,000 for 2002, 8,000 for 2003, debentures 1 lakh 2002 and 1 lakh for 2003, and assets cash in hand 15,000 for 2002, 10,000 for 2003, cash at bank 10,000 for 2002, 8,000 for 2003, debtors 1,60,000 for 2002, 2 lakh for 2003, stock 77,000 for 2002, 1 lakh 9,000 for 2003, bills receivable 20,000 for 2002, 30,000 for 2003, and both the side total 2,82,000 for 2002 and 3,57,000 for 2003. So with this we have to prepare a schedule of changes in working capital. So for to prepare a schedule of changes in working capital, first we need to know the current assets and current liabilities. So here we have to prepare a schedule of changes working capital. For that we have to find out net working capital. Let's see what are all the current assets and current liabilities are there in the given balance sheet. So here cash in hand is current assets, cash at bank is current assets, debtors is current assets, stock is current assets, and bills receivable is current assets. Coming to current liabilities, if you see the liability side, creditors current liabilities, bills payable current liabilities, and share capital is not a current liability, general reserve is also not a current liability, debenture is also not a current liability. Now let's come to the statement. So this is how a statement should be written. A schedule to know the changes in working capital. So 5 columns will be there. One is particulars, second column is previous year amount column, third column is current year's amount column, and the fourth column and fifth column shows the changes in amount, which is the increase or decrease in current liabilities or current assets. So in current assets, cash in hand is taken 15,000, 10,000. So difference, the current asset is decreased, so 5,000 is written here. So 5,000 is written here. Then cash at bank 10,000 and 8,000, so it is also 2,000 is decreased. Debtors 1,60,000 and 2,40,000 is increased. Stock 77,000 and 1,09,000, 32,000 is increased. Bills receivables 20,000, 30,000, 10,000 is increased here. Coming to current liabilities, only two current liabilities are there. First one is current creditors and another one is bills payable. The creditors opening balance 55,000 in 2002 and the closing balance of rupees 83,000 in 2003. So it means here amount is increased. Even though it is increased, since it is current liability, we should treat it as a decrease. Actually it is a decrease in current liability. Bills payable 20,000 and 16,000. 4,000 decreased here amount, but since it is current liability, the bills payable, it is treated as increase in current liability, that is 4,000. Now the total of current assets 2,82,000, 3,57,000. Total of current liability 75,000 and 99,800. The difference is working capital 2,07,000 and 2,58,000. 2,07,000 of net working capital in 2002 and 2,58,000 in 2003. What is that? The net working capital. Now let's see the balancing figure. Let's find out whether if there is a increase in working capital or decrease in working capital. So if you see the 2,07,000 and 2,08,000, so maximum is 2,58,000. So the same will be written here and the balance will be find out, that is 51,000. So balance is in this column, and here also if we observe the 86,000, the increase column is more and the same amount will be written here, and if we find out the balance 51,000 we will get. So the balance is in this column. So it is treated as increase in working capital. What it is treated as? It is treated as increase in working capital. If the balance comes here and here, it should be treated as increase in working capital. If the balance comes here, if the balance comes here and here, means here and here, and here, if we found the balance, then it is treated as decrease in working capital, since we got the balance in this columns. It should be treated as net increase in working capital. I hope you understood how to prepare a schedule of changes in working capital, which is a first step in preparation of fund flow statement. So after finding the net increase or decrease in working capital, the next step is preparation of adjusted profit and loss account to find out the fund from operation or application of funds loss from operations. After that only fund flow statement is prepared with this amount and the difference amount find in adjusted profit and loss account. These two are most important to prepare the fund flow statement. Okay, I hope you understood the problem, how to prepare a schedule of changes in working capital from the given balance sheet. So to prepare a schedule of changes in working capital, you should know the current assets and current liabilities, and how to treat this increase and decrease amount. If in current assets, if the amount is increased, the increased amount is written in the increased column only. In current assets, if the amount is decreased, the decreased amount is written in decreased column only. But in case of current liabilities, if the amount shows increase amount, if the amount shows increased in the amount, then the amount increased is written in decreased column. In current liability, it is treated as opposite. So in current assets, if increased column, if the current assets are increased from one period to another period, the difference amount will be written in increased column only. Okay. If the amount is decreased from, if the current assets are decreased from one period to another period, the difference amount is written in decreased column only. But in case of current liabilities, if the amount is increased from one period to another period, the difference amount is written in. If the amount is increased from one period to another period of a particular current liability, the difference amount is written in decrease column. It is said, even though we show it shows a increased amount, it should be treated as a decrease of current liability. And the same thing, if the amount is decreased, if the amount is decreased in current liability, the difference amount is written in increase column. Okay, it is treated as, if the amount is decreased in current liability, it is treated as increase in current liability. Okay, so hope you understood the what the rules which is applied in treatment of increase and decrease column concerned with the current assets and current liabilities. Thank you very much. With this, I end this video.